Hey, do you know Warren Buffett? Yeah, that guy, the Oracle of Omaha, the investing legend everyone talks about. For years, he's been all about one thing: just buy awesome companies at a decent price. Simple, right? But hear this, even the best mess up sometimes. And when Buffett slips, oh, everyone's watching. His whole Kraft Heinz thing, it turned into $1 billion oops because honestly, emotions got in the way. Sometimes you just love a brand so much, you forget to think straight. It's dumb, but it happens, even to Buffett. If it can happen to him, trust me, it can happen to any of us. And with all the hype in the market these days, this lesson is more important than ever. So let's break down what actually happened, and how you can avoid making the same mistake with your own money. Because, honestly, learning from Buffett's screw-ups, that's just smart investing, my friend. Okay, so hear this. Back in 2013, Berkshire Hathaway and 3G Capital teamed up and bought Heinz. Yeah, the ketchup people. 3G? They're kind of famous for slashing costs like it's nobody's business. And do you know? Profits shot up. Then, just 2 years later, they went even bigger. Heinz merged with Kraft. Suddenly it's this mega food company. Buffett was all smiles. I mean, who wouldn't be? Simple products, huge brands, the market totally loved it. Analysts were calling it a home run. Like, wow, what a deal. But here's the thing, they paid a crazy premium for Kraft. It's kinda dumb, right? For this to actually work, everything had to go just right. Cost cuts, sales up, no surprises at all. They basically bet the future would be just like the past, like, these brands, unstoppable. But do you know? Times were changing fast, and that big, expensive bet, it was about to get tested. The deal looked perfect, until, well, it totally wasn't. Okay, hear this. Buffett totally broke his own rule. He actually fell in love with the brands. Ketchup, mac and cheese, hot dogs. Do you know, nostalgia just got the best of him. He thought these brands were invincible, like nothing could touch them. But he totally ignored that people's tastes were changing. By 2015, everyone wanted healthier, fresher stuff. And let's be real, cheaper store brands too. And get this, 3G just kept cutting costs, so there was barely any money left for new ideas or marketing. It's dumb, right? The brands just stopped growing. Buffett, who's usually all about thinking long-term, ended up backing this super short-sighted plan. He got hit with confirmation bias. He just saw what he wanted to see, you know. He totally trusted 3G's playbook and just ignored all the warning signs. And then, he paid way too much for these brands that, honestly, had already peaked. It's like nostalgia was writing the checks, not logic. Seriously. Even the best can break their own rules, do you know? So, for a while, everything seemed chill. Stocks were steady, dividends kept rolling in. Pretty smooth, right? But hear this, all that cost cutting, it totally killed their growth, like, it just stalled out. And do you know what's even crazier? Younger folks just started skipping Kraft Heinz. They wanted healthier, trendier, or just cheaper stuff. It's dumb how fast things changed. Then boom, 2019 hits, disaster, a brutal earnings report, dividend got slashed, the SEC started poking around, and get this, a $15.4 billion write-down. Ouch. Turns out they totally overpaid for those brands, like way too much. The stock, it just tanked. Billions. Gone overnight. Seriously. Berkshire Hathaway lost over $4 billion in a single day. That's wild. And Buffett, the guy who always says, never lose money, yeah, he lost big this time. But you know what? He totally owned it. Admitted he overpaid and misjudged how strong those brands really were. No excuses, just a tough public lesson. Even legends mess up sometimes. Okay, so do you know what the real takeaway is here? Hear this. Don't get all starry-eyed over a stock or some wild story. It's dumb, honestly. Just stick to the numbers. Fans, they cheer for their teams. But us? We gotta look at the facts. Seriously, write down your own investing rules and actually follow them, even when everyone's hyped up. Ask yourself, are revenues actually growing? Is the product still something people want? Is the price even fair? Your process? That's your shield against making silly mistakes. And Buffett's big lesson? Admit when you mess up, cut your losses, and just move on. No drama. Don't let your ego or your feelings keep you stuck in a sinking investment. That's just pain. Choose discipline, not drama. Trust your process, not your passion. That's how you actually build wealth that sticks around.